What's going on, guys? We'll get started in a minute. All right, give me a quick sound check. We'll be good to go. Get rid of the background music. Hopefully everyone's doing well. Yes, feeling a lot better. I'll talk about that briefly. Okay. Might be a little bit of a lag. Sound good? All right, cool. All right, what's up, guys? Good afternoon, good evening, good morning, depending on where you are. We'll get started in a second. Just move some stuff around. Okay, cool. Horseman, yes. What's up, Olin? What's up, Kent? D. Kent, Martin, or Mart. LA, Meaver, LM. What's going on? What's going on? All right. Give it a second. Just reshared the link. Background noise isn't on anymore, right? All right, cool. All right, guys, what's going on? Hopefully everyone is doing well. Thank you for tuning in. If you're not a subscriber to the channel, please go ahead and hit the subscribe button, hit the like button. As a reminder, everything that I say is just my opinion. So just providing my color, my thoughts on the market, how I'm trading the market. And that's that. None of it is financial advice. None of it is meant for you to take and just act upon yourself. I make a lot of mistakes. And that's how that goes, right? This is not financial advice. This is for entertainment purposes only. There's a buzz. Some people say there's a buzz if you are tuning in either on a static sound. Is everyone else hearing the same static sound? Let's see. Let me check something. Let's make some adjustments. All right, what about now? First, does everybody hear the static sound? Or is it only a couple people? You say, yup, no, yeah. Yes is in to hearing the static. That's weird. Maybe if I turn down the gain a little bit. Slight static. Any improvement? It's weird. This is a really good mic. Use more than just one word answers. Because I don't know if it's because of the lag, I don't know if you're responding to me saying has it improved or not. Weird. All right. I'll have to figure that out. If I turn this down a little bit. I don't know. I'm not a sound dude. Maybe I need one. All right. Won't be able to figure it out during the stream. Okay. So anyhow, thank you guys for tuning in. As a reminder, these streams are powered by Cryptowatch. So this is the platform that you're looking at right here. This is their desktop platform. I'm actually going to be switching in between the desktop and the web-based platform because I think the web-based platform has some things that are worth highlighting. I do know that all of the features that are on the web-based platform over time that they will find themselves over onto the desktop platform as well. Desktop platform has made a ton of updates. For those of you that have been following me for quite some time now, you know that I've used Cryptowatch in the past. And when I first started using it again, when I started using the desktop platform, all I could talk about was how smooth it was. Basically it feels like it uses no compute. And that's really important because one of the issues, and I think that this will become less of an issue actually because Cryptowatch is integrating the trading through the platform now. But one of the issues with crypto or trading crypto is, like I said during the last stream, it's a really fragmented market, you know? So for me, what does that mean or what has that meant? It means that coming from someone who's trading traditional markets and trading through the CME, I didn't have to think about anything other than what software am I going to use? You know, I'm trading through the CME. What software am I going to use? And for most people, the limiting thing is going to be the cost, right? If you are, you know, if you're a really good trader, if you're a professional, if you have the money for it, then you're probably going to be using something like Trading Technologies. You know, I think those ladders are, I think the software is, I think it's upwards of $700 to $1,000 a month. The last time I checked, it's been a while since I've used it. And then you could go down the line with, you know, different costs for different software and different introducing brokers. And then you have to think about your fees. You know, you might be using one broker to the next and paying, you know, 65 cents per contract versus 70 cents on another platform. If you're trading a lot, you could negotiate your fees down. But it's still all through the CME. You know, you have your software, it's executing through the exchange. You're not really paying attention to your broker. It's connected to your software, and that's it. You know, that's the one thing that is running on your computer. Meanwhile, trading crypto, let's say you're an order flow guy. There's all these new platforms out now because order flow became all the rage over the last year. You know, so because of that, there's a bunch of new companies and platforms that want to satisfy that new interest in the market, and you get a ton of products that are pushed out. You know, half of them suck. The other half that are great, you know, you find a couple that you really like. Personally, you might like one with, you know, you might like one based on the aesthetics, one based on the connections, one based on, you know, the tools that it offers. But you can never really find that perfect tool because it still comes down to whether or not you can execute through there, whether or not it connects to the exchange you trade on, because, you know, you might live in one jurisdiction that doesn't even allow you to trade on the exchange that they're connected to. So it's a pain in the ass. And because of that, when you have multiple things open, maybe you're using, and I've done this, right? At one time I was using Sierra charts to pull up a TPO chart for Binance, but I don't trade on Binance because I can't trade on Binance. So I have that platform open just for that because I want my TPO from that platform. It's using a bunch of computer power. And then I have the web-based, the exchange open on the web. And then another thing, you know, to look at whatever, some other obscure piece of data. The point is you got a lot of shit open on your computer, for lack of better words, right? That was very articulate. But the desktop software from Cryptowatch is, as I mentioned during the last stream, it runs, it's like butter. So now with this, you'll be able to trade through the most popular exchanges. You know, this obviously connects directly to Kraken, which is a phenomenal exchange. They offer futures, they offer spot, and Kraken they are the ones that are behind Cryptowatch. So make sure that you check out the links below. This stream is in partnership with them. So there's a desktop link below. There's a mobile link below. I am also now in the mobile community. So you'll see me post on there as well. My platform name on that community is Horse. So it's actually, the handle is Horse1. I made a mistake. I signed up. I put Horse1 because it said I was typing in Kenner & Clark or whatever, and it wasn't accepting it. So anyway, I'm in that community. The Cryptowatch the Cryptowatch community, and it's on the mobile application. You can see I just posted today. I posted that I was going to be doing this live stream. So phenomenal team, phenomenal exchange, phenomenal platform, and it makes sense for you to check it out. I have the trading tier. So as you can see, the upper right-hand corner of the screen, it says trader. That's the top tier you can get. Some people object to paying for things now in this market because for the longest time, some of these things were introduced for free. That's just not normal, right? In legacy markets, and coming from a TradFi background, trading legacy markets, all that stuff comes at a pretty significant cost. You get what you pay for, right? So when someone says like, oh, can't you charge less for something? It's, well, you know, it's like, I mean, it's a great platform. You could charge more, right? Arguably. So I use the trader tier. You don't have to use that one, but that does give you access to everything that they have with really no limitations. Yeah, any other platforms that I talk about, the links are, I've made sure that the description below in all these videos now is the same. So everything is below. Any resources that are not listed below are in the Discord. So I have a free Discord. It is free. This is not like any kind of, oh, it's free, but when you go to enter the Discord, you're in this small room that only allows access to the other rooms by clicking on a ref link. It's all free. And it's free because you get what you pay for. I'm not in there babysitting it all day. I have filled it with a bunch of resources that I think are useful. I jump in there from time to time, but there are a tremendous amount of resources in the knowledge base, in the resource channel, and anything that I use is in there. So everything that I've ever talked about, every template that I've ever used, all of my Cryptowatch templates, they're all in there. All right, so I don't want to get a message saying, where's your Cryptowatch template? Where can I get one? It's in there. All right, so it's in the Discord, and that Discord link is actually in the description below as well. All right, let me see who we got in here. Got a good amount of people in the chat. Just see if there's any questions right away. Cool. All right, so yeah, short story, and then we'll get into it. So yesterday, I actually went to the hospital in the morning. That was not fun. A little bit of I guess a preface to this. I have been taking this new CBD melatonin chewy before bed. Apparently, that causes, for some people, it's caused pretty significant vertigo. Either way, I woke up yesterday, like got out of bed really fast. Like my dog came up to my side of the bed, barked. I got up really fast. And then as soon as I got up, like my heart started racing and I felt like I was going to fall forward. Like couldn't stand up, no balance whatsoever. Felt like I got off of like the teacup ride at Disney World after spinning for an hour. You know, I couldn't stand up, couldn't keep my balance whatsoever, had no idea of my bearings, no proprioception whatsoever. And sat there for a second, went to the bathroom, ended up puking, feeling really nauseous, completely flushed. Wife said I was white as a ghost. And the last, you know, all these little symptoms that I had all at once were the same symptoms that my dad actually had when he had a heart attack. My dad had a heart attack at 60. He's completely fine. Guy is like, looks extremely healthy, but he had a clogged artery. He had a clogged artery, or I don't remember exactly what it was. Either way, he's good. I'm good. But same exact symptoms. So my wife actually had me taken to the hospital, and it turns out that it was vertigo. I thought it might have been a stomach bug combined with vertigo, but it was vertigo, and there was no issues with me. Everything came back absolutely perfect, which is great because I don't need anything happening to me right now with a little one now, a 3-month-old. That would be the worst thing. Anyway, I appreciate you guys who reached out and asked and checked up on me. Let's take a look at Bitcoin. I will take some requests. So really quickly, just to go over, I have a couple different templates. And like I said, all these templates are available. I did share something new this morning. So I shared what looks like there is a website that's called Okatoki. So I've mentioned this in the last stream. And forgive me if I go on a little bit of a tangent in the beginning. I'm pretty clear about what my positioning is now, where we are with respect to 30K. Market's not going anywhere anytime soon, so you're not going to miss anything. But I talked about during the last stream the benefits of using a platform like this, and how it compares to things that you currently use that are currently popular platforms. And one of those being Agger Trade. So Agger is a tape, so it's a time and sales. It's that strip of all the prices and BTC sold at those prices, the venues that are they're trading at, and it's an aggregated tape of all the trades that go through. And you could filter it. You could show only large trades, you could show only spot trades, you could put sound on it. So until Cryptowatch integrated sounds and alerts, yeah, maybe Agger was a superior tape. Now with the sounds and alerts, Cryptowatch's tape I think is far superior. So this is going to sound shilly, but I've been looking for a good all-in-one platform for a long time. Anyone who's been following me for a long time knows this is the case. No bullshit. I've always found something and then realized it didn't have one thing that I wanted, and you get upset because you sort of halfway fall in love with something. So Agger tape can be completely replaced by this. So it's basically this tape that I'm talking about, right? And the benefit of this tape is you could do all the things you could do with Agger. I could filter it, right? So the amount of BTC I want to see, whether I want it to be in, quote, right? So whether I want it to be in notional or base, which would be listed by BTC. I could have this connected to any exchange I want. And then more importantly, something that you can't do with Agger is I could actually indicate with some kind of audible component, the size of BTC that is either being bought or sold. So not only can I highlight buys and sells, right? So I could highlight those buy. I could highlight those actually by price. So by doing something like this, right? Minimum amount filter, enabling highlight. I could see those, right? So that visual component is there. But one of the more useful things about the tape, one of the more useful things about Agger previously was, all right, so the tape is giving you some kind of idea of the level of involvement that's taking place, right? How interested the market is in a given region. You see the tape speed up, see it slow down, right? You could make some assertions based on this. But when you're not looking at it, what good is it? So you can pick up on the pace of the tape, obviously, if you have a sound component. If you have the tape moving fast versus slow and there's sound, you could hear that, right? You could hear it speed up, you could hear it slow down. Now, the thing that makes Kraken, we're looking at Kraken, but the thing that makes the Cryptowatch tape superior is that now I can not only just isolate either buys or sells, but I can isolate the large buys or large sells. So let's say I only want to hear large orders come through, right? Not the odd lots. Not like I talked about last time during the last stream, what an odd lot is, where it's just it's a phrase that's from legacy markets to describe, like, if you're buying stock and you buy it in clips of 100 shares, the odd lots are like your small retail traders that are buying like 4 shares of Facebook, right? Insignificant money. Unless, like I said, we're in some kind of bubble, and then all that insignificant money adds up and becomes part of the larger animal spirits. So I could highlight that on this tape. But as I was just saying, there's another website called Okatoki, which has all the books. And here's where it gets even better, right? So these are all the books that you'll see. If you see someone share Okatoki, Okatoki is a great platform, so I don't mean to talk anything against this. And I apologize if the stream's starting off and I'm just kind of going over more Cryptowatch stuff and not getting into the charts. But like I said, we will. But I did add a few things that I do think that are valuable to you guys and are worth going over. The books that you see right here, so all major exchanges. We have Kraken, we have Kraken Spot, we have Coinbase Spot, Binance, OKX, and then we have the leading perp exchanges. So leading exchanges with the most significant amount of open interest are going to be the ones that swing price discovery. So this is your depth chart, right? This is your order book. Now, you could either have these individually. So I opened all these up, by the way, by just clicking this split module and picking the amount of boxes I wanted to have open. I can show these individually. So for example, we'll just increase this one. This is Kraken, right? Individually, combined, or cumulative. So here's your individual, right? This is going to show you at what specific price, right? It's going to stick out a little bit more because it's not going to be added up in terms of the bars being next to those prices. You can still see there's a cum, right, to the right, but it makes the larger orders stand out a little bit more. So I could do individual, I could do cumulative, which is not going to have any of that. It's just going to show you the cumulative book with the actual bars next to it. But the combined is where you could actually see those underlying large orders that are highlighted from that cumulative graph. But that's not what I want to point out. What I want to point out is that actually you could set alerts on all types of things. And to bring it back to what I was saying during the last stream, one of the things that I've always used in my trading when it comes to BTC, when it comes to crypto, is looking for spreads blowing out as a sign of either bottoms or tops. So spreads being the bid ask, right? So normal spread in crypto is much wider than a normal spread trading something like, the S&P futures or the NASDAQ futures. But you could see spreads blow out. So we could look at an order book and you could see, the spreads are increasing. When a spread blows out, it's going to be very quick. You'll see a big gap at the best bid, best ask. But another thing that you could do is actually just place an alert for that. So what I've done is I've had large orders added indicated, right? So if there is someone that's coming in and spoofing the market, like earlier this morning, I shared the Binance spoofer. So it looked like there was someone spoofing in the bid on Binance, not really tremendous size, but I think it was like $3 million worth of BTC on the spot market. So remember, that's not notional on futures. That's in the spot market. So it is significant. It was within just a couple basis points of price. So what that looked like was someone was actually spoofing into their sell orders above. So it wasn't that they actually had intent. And this is one of the things that you want to be able to discern if you're looking at an order book, if you're looking at that combined with the tape, whether or not a level is actually being traded into, whether they're staying or they're removing, that would indicate whether or not they have intent at all to get filled. But what I could do is actually, again, how often are you going to be able to, because this is one thing, like if you're I don't use all these things when I'm trading, right? I'm not always looking at, before I take a trade, I'm not always looking at the order book and then always looking at CBD and then always looking at the footprint. And, by the time that I look back to actually clicking the button or tabbing the hotkey, the trade might be gone. You have to be able to synthesize this all at once. So the more you cram that useful information into a tinier thing that you could digest, the better. So rather than me, again, this might be something that's off to the side, not front and center. I look at it from time to time. Is there anything that stands out as, absolutely kind of absurd? Here you have 14 million contracts at 28.94. That's pretty significant. If I had the sound on, it would probably be indicating that right now. But rather than keeping this on and looking at it and seeing if anything's popping out, so you hear that? That's for that. Rather than keeping that on and seeing that there's like an absolute ape on the bid or on the offer, I could just place a large order added alert. So I have large order added, size threshold is above 50 BTC, right? So if we change this to base, you see that it's obviously well above that. That's 526 BTC. But I have that on. Let me turn that down now. Turn that off. I have that on. I have the size threshold picked. All right, so I'm looking for spoofs that are, I'm looking for size that is significant, right? So for this, just the sake of this, to do a quick experiment, I had it low. But 50 BTC, right? Not exactly low, but that's, it's just over $1 million. And we have, not just over, what's that? We're closer to 1.5. Distance from the mid. So this is measured in basis points. So what this is going to do is going to take a window between, 25 basis points above and below. So 25 basis points is 1/4%, right? So a basis point is 1/100%. Okay, so you got to think of it that way. So if there's anybody that hops up within that window, right, which is kind of where you see spoofs occur, you could see a little bit out, further out, you could see them closer as well. But if they don't want to actually get hit, they're not gonna get all the way up. They're not going to get to the point where they might actually get transacted into and get picked off. Depending on who is quoting this, whether it's a market maker with a very fast connection, they'll be able to cancel or remove that. But either way, I don't have to have this up. I could hear this happen. So this is important because, again, something that I'm not necessarily focusing on, I can't afford to just look at everything all at once. I need to be able to pick up on some things without having to actually turn my head and do that. So I have that. And then also, as I said, the spread narrowing, the spread widening. I don't need the spread narrowing, right? That's going to collapse after a big event, after a big move, after major liquidations. I want to know when the spread really widens. 5 basis points is the generic right there. I want to know when it widens even more than that. 5 basis points is nothing, right? That's like your alt spreads are, ridiculous. They're like 50 basis points in some cases, 100 basis points, depending on what we're talking about. So this is, if you're using Okotoki, this is something you could really move over onto if you begin to use the Cryptowatch platform. All right. Wanted to get that little shill in there. Needless to say, you could trade now on the ladders, which is absolutely fantastic. Scaling into orders, doing all those things that you can't get access to on the actual exchanges. Okay, so I want to take some chart requests because I am going to look at some things that you guys asked me to pull up. Can't say that I'm going to be interested in them, but I will absolutely take a look. But until we do that, and another thing I didn't realize this last time, and my mistake, because again, I don't want to do every stream. I don't want to just shill a bunch of stuff and come across that way. But there are things I forgot and I want to tag just so you guys can make note of them and be able to take advantage of it as well. I didn't realize that they have legacy markets. So as you can see, we have the CME Markets right here. And then I also didn't realize that they have basis and open interest and all of that. Predictive funding, current funding, open interest. So you could pull all these things up. So as you can see, we have Kraken beat, for example, we have inverse futures, current funding rate, and then we have predicted funding rate, and then we also have open interest. Now I will always, no matter what, right? So I will always keep an eye on Binance open interest more than anything. This is not a shill for Binance. It's obviously a pretty troubled exchange right now, but I will always keep an eye on that because that is where you're going to have most of the activity done. And if you have a very significant pickup in Binance open interest and that new risk comes on into the market in a really tight area and we have trouble around that area, well, it usually isn't going to bode well for even people that are not trading on Binance, right? There is obviously these exchanges are all affecting price action, all affecting price discovery, and it happens to be that Binance is going to be the one that kind of moves the needle the most. So I want to see always where Binance open interest is. I know this is kind of like sounds like a newer stream because I talk about this stuff all the time, but I am just highlighting that I do have it down here on the chart under ATR. So if we lift this up, there's your Binance open interest right there. All right, so looking at charts. Apologies for going on that long introduction. This is day by, so we can actually just cycle through these things really quickly by using control and then the bracket. So I asked a question the other day on Twitter. I said, what takes priority? All right, I will look at the tickers in a second on in the chat. I said, what takes priority? Is it the weekly local breakout, right? So what I meant by local is the more recent one. So we have a 9-month range, all right? We have a weekly breakout of that structure. And I asked this up here, right? I'm not saying, I wouldn't have been asking the same question down here. I'm asking right here. What is more important where we sit right now, basically? Is it that weekly breakout that now we are, however many percent above? Or is it the fact that right now we're right next to higher time frame resistance? And I don't think that you can write this level off. I get it. There is a good amount of similarity, I guess, between this structure, right? Putting in this very significant high time frame low between the two peaks of the bull market and maybe these lows going back to 2018, excuse me. It is different though. This structure, is somewhat similar to this, right? We're kind of put in a very significant move off the lows, bottoming structure. We're first time retesting what would be looked at as the most significant level on the chart ahead of us. The time when that happened back here, everyone was looking at this level thinking that it was going to obviously act as a very significant resistance. We kind of hung around this level for a month and then we just absolutely ripped through it. I want to say that, structurally, those situations might be similar, but we have completely different context now. So you have to consider that throughout the entirety of this bear market, There's been a lot of firms taken out. There's a lot of bankruptcy proceedings in place. There are possibly assets that are, and BTC and ETH being the more liquid ones, that are still looking to be sold. And I think that is kind of a headwind we're going to have to deal with until those things are in the rear view, or until we actually know that supply has been absorbed by the market. So the higher we go, I think that you're going to have people that are still looking to offload to get out, as part of legal proceedings, as part of these bankruptcy proceedings. Again, Mt. Gox is an example. And I just think that the context is completely different with that respect. I could be completely wrong, right? We could absolutely rip through the level, but I do think that the level deserves respect. My point was, do you want to open up fresh longs right here? Or do you want to look for some kind of pullback? And yeah, there's a great argument to be made for, if it's a really strong move, you're not going to get a significant pullback, and maybe it was just these micro pullbacks. And if you're in from those levels, that's great. But my point is, adding at these highs, it just seems like it's not the best risk reward. From a dynamic risk reward standpoint, I think that you have to show this level of respect. And I think 30K is the level that really is make or break for me. It's like a major shelling point. It's a big round number. It's not the like 50% retracement of this by any means. So I shared that chart a couple weeks ago, 42K, that was around that level. 50% retracement of this entire drop. It would be normal if we came all the way up there. In a lot of different examples, even in a sustained downtrend, the market's going to pull back 50%. So yeah, you could be high time frame bullish. Like, I am high time frame bullish for the next, into the end of the year. I think that there's great buying opportunities that'll be worth holding on to for the next few years. But I think you could still afford to pick and choose your shots. Do I want to be adding into this region? No, I honestly, being that it's the first time we're retesting this level, I think that you're going to get some really great opportunities to short and some traps to take advantage of, because people are FOMOing around here. So I ended up taking a few shorts this morning. I'm not currently short. I actually closed those out. I took it was 400 points, 300 points short. By no means am I talking about swing shorting this. All right. Hedging and swing shorting outright are two completely different things. I have spot exposure, so I'm not completely out of the market. So there are periods where I completely hedged, where I take some off. I have a good amount of BTC exposure right now. It's just spot. And, holding spot versus holding futures are two completely different things. One actually has a pain point, right? One of them is path dependent. One of them can be liquidated. So I just think that it's, you're not missing out a lot by waiting for some kind of move that claims 30K and shows that it's put in some kind of higher time frame market structure up here, or has constructively moved through there. So constructively meaning maybe we get a pullback back down to this level. Maybe we have a pullback back down to just 26 and we see some kind of constructive price action down there that you can get involved in. And then your risk reward from here to up here, well, it might be worthwhile holding that after breaking down again towards this low. So for example, if we end up correcting from this, right? So if we end up correcting back into this multi-day composite value, if we end up doing something like this, and then putting in constructive price action back inside of this range, I would be more likely to hold a move from here through resistance, right? Kind of managing that position at resistance, or possibly just holding it, than taking anything at these highs below 30K. Could this just scoot its way through? Absolutely. But me personally, I don't see how that's a trade even worth taking. And I don't feel like you're going to miss out if you buy above 30K whenever some kind of constructive price action is put in, rather than buying at 28.5, 28.241, wherever we are right now. So that is my opinion on that. It's just kind of one of those levels where I think you would slap yourself for not selling this if we end up pulling back even back down to 25. Right? I just think it's such an obvious level. And again, maybe because it's so obvious, it's going to be the one that we absolutely smoke. But as for my own sanity, I can't be buying into this level. Real quick. So where we are right now, just to go down to lower time frame, the other day, so I'm going to switch over the chart real quick because I didn't label this one. So this one is labeled. So I had mentioned, and this, just to go over a trade I took because I was long. I was initially short, right? And then I flipped long, posted right under that short, posted my long entry, and flipped long to the weekly high, which at the time was right around, where was that? At the time, the weekly high, let's see, it was probably that daily high as well. So that was right. I ended up closing out right up here. So it was from 20. My entry was 20. I think it was right around 27. It was right around here. Maybe it was slightly below. Maybe it was actually right around 21.2 or 21.1. I don't 28. Excuse me. Either way, doesn't matter. So I was short, right? This sort of gray blue box. This is a 9-day long composite value area. So this is your value area low, is your value area high. So just what that means is prices have been ranging within this region, 70% of the activity. So 70% of the time in this case, and the volume and the trading took place within the structure. So it's just a very agreed upon price. You know, this is an area where you look to, if we're in sort of more of a ranging rotational environment, mean reverting environment. This is an area where you look to fade extremes, right? So you look to buy the lows, potentially sell the highs, look for some kind of absorption at either ends. This move was on a catalyst. So this move was on the Binance news. This was the CFTC making, you know, a statement about Binance, their investigation. And it was assumed that, and it still is, that the DOJ and the SEC will follow up. So this was the catalyst level that I talked about, being the make or break level. There are levels from market structure that you could derive. There are levels from volume. And personally, I always also mark off levels from catalysts. So anything that's event driven, anything where major news hits the market and causes the market to move, you know, quite significantly, I mark off that level. Because I think if in the case of a you know, bearish news, I think if pointing at the screen like you're looking, I think that in the case of something being really bullish, you have negative news that constantly is hitting the market. And instead, what is the market doing? I mean, year to date, Bitcoin is up 70%. So that's a sign of a bottom, right? That's also a sign of a bull market. You know, any kind of, the market will move up on good news. It'll move up on neutral news, and it won't move down on bearish news. And if it moves up on bearish, wow, I'm getting tongue twisted. If it moves up on bearish news, I mean, what more do you want me to tell you? How strong is that? I mean, that's incredibly strong. So this for me was make or break. I personally was thinking, okay, that was bearish, right? Not only is that bearish because on its own it's bearish, you know, expecting possibly more follow-up to come out. But we broke outside of this multi-day range. It's the first time we're actually showing acceptance under it. So it's the first time when the market is actually able to accept through an extreme. So here are your extremes. So we're accepting, we're spending time under here, we're retesting the level. So, I mean, from a risk to reward standpoint, back within this range, anywhere back within there. So whether it's at the halfway point, whether it's just above the area where we rolled, whether it's above that Binance level, it's a reasonable area to define a position if you're expecting continuation, which is something that you could reasonably expect. So rolling off of this level, it is looking like it's possibly going to break further down. And I ended up, and I'm not going to short into that breakdown. It's not the most attractive setup because possibly also, you know, market had been strong up to this point. It's possibly one of the better areas to get trapped doing that because you have a bunch of activity coming in here. You have the market accepting here, so you have two-way trade. Someone's going to be wrong. You could at least just mark that off and possibly sell the breakdown further, right, when we actually take out the low. Or you're looking at possibly a trap developing where you break back down towards that low like we actually had happen. And instead, the market is now absorbing higher. So when we had the fake out into this, I mean, it looked like a fake out at first. The area where you would want to see price get really cut off is if you imagine this was a double distribution, are those single prints. So that's the gap, right? This is where things should get cut off. So it is the best area to sell, right? It's the best area to sell, arguably, and also to look for signs of acceptance and possibly a reversal. So I sold it initially. So I sold on this, and I was willing to hold this, right? Assuming that maybe that was a fake out, swing failure, and then ultimately continuation. I was willing to hold that unless we show sign of it, unless we showed signs of acceptance. And this is kind of, you know, just from a presence alone, you could look at acceptance in order flow. You could look at actual sells hitting the tape. You could look at a footprint chart. You could look at volume being transacted at the level and say, okay, there's a lot of selling coming in. The level's holding. Or you could just see constructive price action at the level. So constructive meaning if it's constructive in favor of the bulls, you just have on sort of a micro time frame, you have a series of higher highs and higher lows. You have a level being defended with some level of snap. So this was the first pullback. And for those of you that have been following for a while, you know I talk about this all the time. If you have either, in the case we'll just talk about moving upward, if you have a high and a low put in, if you end up taking the high and then taking the low, I don't fade the next move, right? So in the case of moving up, if we end up taking the high, taking the low, and then we're moving back up, I don't expect that this will ever just swing fail again and then break down. I mean, it could, right? But more often than not, the opposite happens. And the same can be said about the other direction. You have a low put in, a high put in. You end up taking the low, taking the high, but then you're back down at an extreme. I just expect that this is going to continue. And the opposite in this case was, so high taken, low taken, and then now we are constructively back above that level. And again, most importantly to me was that Binance level. So there was front running into that, right? So front running by people that knew what was going to happen. This was the actual breakdown point. Price accepted below, balanced out. And then you could even see that this is the first time where you have a period of balance followed by a breakout above that. And then now again, acceptance and balance above. Now it's not balanced necessarily over a long period of time, but we are re-accepting back in this gap rather than, you know, if this is a gap, and it's the thing about a gap is you blow stops out, right? You create an air pocket. And then where there are stops that are actually on the book, there's also people that are probably not using stops and are going to look to get out of break even. So when you reapproach that level where a significant move occurs, it should be kind of not one and done, but it shouldn't be the case that you're able to spend time in there. So then instead, we're just kind of drifting higher. And that's where I ended up longing. I ended up longing because a lot of times if you do that, if you accept into this gap, I don't know why I keep drawing twice, like as if you don't see the first. If you re-accept into a gap, you're just going to move from one side to the next very quickly. In this case, targeting the highs is a very reasonable move. But the better play was actually just expecting, okay, we're back within this range. Again, a very balanced region. We're not going to just look to target the midpoint of this. We're going to target the highs again. So that brings us to where we currently are. We're testing what is arguably the most significant level on the chart. I say if you're looking at this chart high time frame wise, there's always two very significant levels, right? If you're in the middle of dead space, and in this case, we are establishing value in an area that we had not previously. So in this gap, so that is going back to May and June. There's two significant levels. There is the weekly, right? So we'll put the weekly chart on. Weekly level right back down around. So we'll use, we won't use that tool actually. Just a line. Whoops, did it again. There we go. Right around 25. And then arguably, we're between a rock and a hard place right up to 30K. So where is it? Could I get rid of it on this? I did. I must have deleted him. Oh, it's back on the other chart. So we'll go back to that. Here we are. So we're always, if we're in the middle of dead space, we have the most significant level now back down around 25. Okay. And then we have the next high time frame level, which is, I think, so normally if we are making our way back through structure and we have periods of balance. So for example, this is a brief period of balance. Normally in this case, if we re-accept into a region like this, I'm going to get rid of this. What is my drawing tool that's the line? Hold on one second. Where's my hotkey? So you can just go to hotkeys up here and see. So horizontal tools, H. So normally, if we have a range where price has carved it out pretty neatly, like this. So this is, as you can imagine, some level of balance, right? It's a multi-day composite. This is over a month long. So price cleanly defending lows, cleanly defending highs. Normally, if we re-accept into this kind of structure, so meaning if we were in this case, like imagine we're accepting, and it is kind of, you know, it's, at this point, like if we don't reject from here and we continue to trade up, maybe 30K isn't as important. I think 30K is still a very significant level because it is just it's one of those round number levels. So I'm gonna stick to that. But normally, if we re-accept into a range like that, you know, after rolling off, right? So we're testing the level. We have a swing failure right now. Again, same thing that I just talked about for lower time frames. So we took the low. Now if we take the high, and if we come back down in here and we're back above there, most of my trading is going to say we're going from the low right here to the midpoint, which is 30K, and then we're going to tap the high. You know, we're re-accepting back within a range. Over time, we should see that fill out, right? It's been accommodative price in the past, accommodative of price in the past. And it's kind of like, as I always say, you know, imagine that this is sort of a divot, like a topographical divot like that. And if we're able to go over the edge, then we kind of just roll our way to the other side and then kind of carve that out again until we settle at some point, you know, some agreed upon price. So I normally would look at that like that. But I think right now we could get a move that is exhaustive that spikes up to 30. And I'd rather see the reaction around 30, to be honest. So if we tag 30, right? So imagine in this case, we tag 30. And then we're back down around 28. And then we're holding this level. And we're still back inside of this range. Then I will probably look for the long from the, you know, 28, what's that, 28, 247, kind of right where we are now at the high of this structure, right? Because that's a multi-day composite. So if we tap 30, there's a major rejection, but we're holding this level now. Then I'll look from this move to up to 32. I mean, as long as that's level is retaken, if we're able to, and I think we are going to, if we're able to retake 30, I think we're going much higher, honestly. So I'm not one of the, and I'm just, as you can tell, like I'm bullish, right? But I just think we're at a level right now where I don't feel like you want to press the gas pedal. But if we're above 30, there's not really a whole lot that stands in the way, because I think you have people just FOMO in at that point. So if we're constructively above 30, I think, like I said, I mean, we could put on this tool to give you an idea more specifically. So the great thing about Cryptowatch is actually it just marks off the low and the high for you. So you could see that it marks off the lowest point on your window and the highest point. So let me just get rid of all these. So that is your, leave the 100 on. That is your 50% retracement. Where's the fill color? There we go. So right around 42. And I could see us getting up there. I mean, if we're back reclaiming these lows and we're constructively above that, and I keep saying that we're constructively because I think it's a good way to, I think that that's something that people can see in price action rather than just saying strong, you know, showing signs that price is putting in higher highs and higher lows, rejections at the lows, some kind of swing failures and reclaims, just price regaining a level and you know, building structure above that level. So again, if you're using TPO, you know, you might look at price spending a certain amount of time above a level and say that that's constructive. But the point is, if we reclaim 30K, I don't see why price can't slingshot much higher. I don't think this is going to all-time high, but I don't see why we can't go higher than 30K. I mean, Bitcoin has a habit of really exceeding everybody's expectations. And I think that that's kind of a FOMO level. So if price suddenly is now holding 30K, I think that Bitcoin is a little bit, I think it's shared over the mainstream a lot more again. You know, Bitcoin is back. I think that if BTC is above 30K though, I think it just continues to imply that the S&P is doing well. And if we just look at this right now, so to reiterate points that I was making a while back, so we'll just place a moving average on this. So as you can see, pretty easy stuff to add indicators and all of that. That's a moving average envelope. So simple moving average, there we go. And we'll just put the 200. And then we'll take off the volume moving average, which is like your VWAP. There we go. All right. So the level for me with the S&P, as I said, is that multi-month range, right? So this is, let's see, we got a monthly chart on here. The monthly setting, it doesn't matter. It's 4150, I think. 4150, that's right here. So we'll say between 4150 and 42. So roughly right there. So now we held the 200 on the daily, which is what I'm going to be looking at more. We broke outside of this at this point we're over a year. Multi-year descending diagonal or trend line. You could tell that I don't use trend line diagonals too often. I think that, they're useful, but they get violated by time passage alone. Held the 200, broke outside of that. Like I said, I think the final boss is still, it's that 4150, 42 region. I think it's 4150. Again, there's no monthly setting on this, so maybe we'll have to get the team to add that. But the point is, we had been in for 9 months, hadn't closed higher than that. So 9 months in a row, no closes above, let's say 4,200, right? If you're above 4,200, if the S&P is above 4,200, you could act on that level. I mean, you're giving up a little bit if it's at around 4,150, but the point is, that is a massive move. If we're above 4,200 and we have all of these things lined up, I think that's it. And I say it's it because it'd be very difficult to stay sidelined if you're an asset manager, if you're a portfolio manager, and now the S&P is already up 5% year to date. You have broken outside of that multi-month range. You've broken all measures that you would look to see if you were trying to say that a bear market was over, or you would want to see satisfied if you were going to say a bear market is over. And then at that point, you have career risk if you're not back in. So 4,200 on the S&P is massive for BTC, right? If we break 4,200 in the S&P, there's really not a whole lot. I think you obviously have your lower time frame levels, 43, 45, and those are big moves, right? We can't just write them off. But I think that you see that, more importantly, that when the S&P is back above 4,200, whenever that is, that things that are further out the risk curve really just absolutely jump off the chart. And obviously, as I've said many times before, Bitcoin kind of just trades like high beta tech, or just trades like tech, period. So if we do get that, then I think you have a much higher, the total market cap of crypto is much higher after that point. This all makes sense, guys? So that bidder on Binance is still hanging out, but that's in futures. So now you can see it. If I just place it on an individual, it stands out a lot more. I don't think they actually have an intent to getting filled though, but we'll see. So perps are still trading at a discount to spot, but it's not as wide as it had been. So what that looks like is, it looks like your funding has gone from on and off being negative to being a little bit more elevated again. And I say on and off negative because there are brief periods where it was trading negative, surprisingly enough. But again, people fading this. This is ARB. Let's get cracking ARB. See, new pairs though. So the thing about this really just relies on the rest of the market continuing to move up. So that's one thing I wanted to share this on the desktop platform is ARB. I think ultimately everything kind of starts lining up with ETH and BTC from a correlation standpoint. In the beginning, you're going to have a lot more disconnect, but you could see that ARB is positively correlated to ETH and BTC, which is like everything in crypto, period. Lower caps. So basically it's not the strongest correlation, but it depends on the health of the overall market right now. High time frame wise though, I could see how you could look at this and think that this is putting in a bottom before a much larger move. But as I mentioned, you know, it's not necessarily the case with this because this was an airdrop, but it is more significant when you have something like this. You know, from a psychology standpoint, this looks like it's bottoming. But if it's something where there are people that are in really early through seed round, for example, they're already up 1,000% plus. Even if you have these lows broken, you're thinking, oh, they have to hold, you know, that's the bottom. We're looking for a retest of that. Maybe it's a good area to buy because it sort of gives you that impression by looking at the chart. But there are people that could sell into a 50% drop still and still be up, you know, thousands of percent. But ARB does look good. What was I just going to do, though? I forgot. Battle Station. Again, all these templates are available. So honestly, just low time frame wise. So what I'm looking at are trades possibly to take. If this is able to right now, so for example, we're chopping around that Binance level. I think it's probably pretty stale at this point. Safe to assume that that's not going to give you, that's not as actionable as it was. I think this composite is more important now. So we'll take off that line. Oh, that's not what I wanted to take off. I'll leave them both on so they're not connected, but let's see if there we go. Hold on. Get rid of that. So this multi-week composite, right, between 38.3 and down to 37.2, 37.3. If we're able to hold this now after this rejection, so we've taken that low, if we're able to trade back above something like, let's say 28.3, right, even before, so this little compression, so around 28.5, I could see this not being done squeezing up yet. So if we're starting to, again, just the best way to put it again, just if we're starting to put in constructive price action above, back inside of something like back above yesterday's high, not inside. So right around what we say, well, that's kind of the same line as the Binance line. So today's open, right? It's a good example. If we're able to reclaim today's open, and then at that point we're back above this comp value area high, right? And this is the daily open. If we're trading back above here, putting in constructive price action, then I think that we're probably just going to target this high again. Again, I don't think that this is the level that's necessarily going to reject price. I don't think it's guaranteed. I just think it makes sense to respect this level. And I'm willing to look for that all the way up to 30. So maybe it ends up leaving us with something that ends up grinding up further up to 30 before we see anything worth worth trying to make some kind of longer term, or determine some kind of longer, or not longer term, but in the, let's say next week or two direction. So meaning if we have a significant rejection at 30, today's Thursday, if we're going to have some kind of pullback after this kind of structure, like imagine right now that we break down into this range instead of reclaiming today's open, I think that you just target these lows again. So I think you're looking at a move that takes place over the course of days, if not over a week. So maybe you're even left with something similar to down here where we end up rotating lower. Maybe we get that larger pullback. And if something is really strong, there is definitely a case to be made for not wanting to see it pull back much. But I think in this case, I think I would be remiss if I didn't look to bid this level or to look for longs into this gap. So below 27 down to 25. And again, if we're back down here, this could be something that takes days to develop. But I think from a risk to reward standpoint, it makes sense to look for longs there. We haven't really had any kind of significant retest of that level. And again, in a really strong bull market, a lot of times you won't get a pullback to a textbook level. You'll get a pullback well above it, and then you have to determine whether or not you're going to sack up and join there, and whether or not that's sufficient. A lot of times when you do get the level all the way back down, return back to that level, the point of origin where the market structure had changed, that's where more often than not we've seen something like this occur, right? And the last thing I think that we want to do is trade back within this range, right? So trading back within this 9-month range, I think it just opens up the door to much lower prices at that point. And I don't mean lower prices below the lows. I just mean if you're trading back below 25, there was not a whole lot that had been established here. There's not a whole lot of reason why we wouldn't trade much lower back down to that 22, 21, 20 handle. So because of what I just said from the long side, needless to say, if we continue to have further rejection in this region, so we've taken the low so far, if we continue to, let's say we trade back up here, and don't take these drawings literally whatsoever. If we trade back up here and we're starting to rotate back inside of the structure, and we're trading again now back towards this low, then I think you could, you could start looking for what's reasonable, I would say, to look for shorts. Let's say we break back up here. Let's say we have a major rejection even higher. The point is, the only way that I think in the short term you prioritize longs is if this is it, right? We've taken this low, traded back within this gap up, and now we're back above, and we're not back within here doing that again. That should be sort of your swing failure right there. Now it's intraday though, right? But I think that just chances are that if we're rotating back down towards that low, so what is this low today? It is that current low right there. I think if we're making new lows today, that it's going to have follow through. So, ultimately the point is this level you want to see hold. mean, it's ugly daily candle so far. So yeah, I saw my friend actually messaged me and showed me that Brent posted about me. It's always very flattering because he's my favorite author when it comes to trading books, and he's got an amazing newsletter too. When it comes to premium and selling options, I don't really like to do that. The only time that I'm going to be selling an option is if it would be covered, right? So covered call, right? So owning the underlying stock. Even that is not something that I do. I'm usually selling naked is where you get in trouble, right? So it's not it's not bad if you sell covered covered positions, so covered call, covered put. But the only time that I really sell options is when I'm trading spreads. So some kind of call spread. So selling a same expiry, like let's say for example I was trading a Coinbase. If I was we're using Coinbase as an example. I actually just closed my Coinbase calls out because it returned quite a lot in the last couple of days. So I posted this morning about them returning nicely. And then I took my own advice and sold my position after posting that because that was kind of a cheer. But Coinbase spread. So basically buying a, this was, I believe this was May expiry. I have to look back on it now. It was either May or June. So buying what I had bought was an out of the money call, and then I had sold an out of the money call at a higher strike. So kind of financing that position, but covering my ass. And the thing about that is obviously if you're just buying a call, your upside is technically it's infinite, right? Theoretically, I guess, but it's never going to happen, obviously. But if you are selling a call, your risk is potentially infinite as well. So by buying a call, you're basically capping your upside, but you're hedging the potential blow up there. But no, just selling options though is not something on its own that I do. Unless it is so I've sold for BTC I've done it before. Where implied volatility really just blows out, and I have really strong conviction about price not making new highs in the near future, and it looks like some kind of blow off. But you only have that once in a while, right? Let's see. What do we got? FTM. Take a look at FTM. So Mayor, let me share that because I just created that. So I'll add that after the. Let me see if I just add this during. Hold on a second. Let me add the template right now. So books. It's easy as clicking share, and then I have these all in. Where are we? Cryptowatch Alpha. There you go. And I will give you guys an invite link just in case. There you go. FTM. Let's get back to that. So I know obviously FTM has more price history, but I know that this is what retesting. So if this is Kraken, but just to make sure we have the entire history, we'll also pull up a Binance one. Yeah, so I know that this is a, so we could just stick to the other chart. This is a, again, what looks like a significant breakout of higher time frame market structure. Doing the same thing, you know, almost everything is outperforming, right? Year to date. So outperforming BTC, I should say. So for example, off the last chart, you saw that to the left, this was a multi-month range, the same with BTC. So if we go to, real quick, just to get that exact level, make sure it's the same. Yeah, it is. So it goes back to 38. That goes back to May of last year. No, it's even further back than that. Yeah, it's around May. So that being the most significant high time frame level that we're retesting right now. So just making sure that it's kind of this. Yeah, it's basically the same. So let me just box that out. Kind of a loose region. But the point is, breaking outside of that multi-month, almost a year now, range. Now, I don't know. I'm very skeptical of alts right now. So I'm interested in alts if ETH BTC is performing well. If we're in a situation where it seems like there's a rising tide that everyone's benefiting from, it doesn't seem to be the case right now at all that is the case. It seems like BTC and, you know, what's the other one? CFX are performing well. There's little pockets of idiosyncratic strength, but for the most part, it looks like Bitcoin has all the attention, while alts were just bleeding out. So while this is, you know, again, it reclaimed a higher time frame level, you know, you're just putting in a series of lower highs underneath it. We dip back within it. We're kind of loosely back above it right now, but I think it's an alt, so it's thin, so the areas are muddy, or the zones they're not precise. If you have something where now we are, for example, trading back up above, I think 50 cents is actually a really good level. You know, 50 cents being a round number, you know, kind of a number that stands out. And also right back above this local high, because if we're making a downtrend right now and it's kind of just a series of lower lows and lower highs since the end of January, breaking out above that would arguably negate that pattern. You know, then you have this kind of structure where low, break below that low, and then you put in a higher low, or you're in the middle of putting in a higher low, and then potentially on your way back to putting in a higher high. But if you have something like that where you reclaim 50 and BTC is strong, ETH BTC is strong, then I would start looking more towards alts, and I could see that this might be a nice play back to that high right around 70. I'm really hesitant about even thinking about alts right now because I just don't see the reason to. I don't see what would make alts compelling. Like, I feel we just used up a narrative again, more narratives again, and I think that alts are just vapor to begin with. I think that alts are, there's definitely, it doesn't mean that things can't go up, right? Just because they're, you know, told, you know, bullshit stories are told around them. But I think we did that already this year. You would have to have a major influx of retail money to make alts have and again, it's a difference between me saying rising tide and idiosyncratic, right? So meaning I care about alts when there's a rising tide, when the broad market is benefiting, right, from an injection of money. Is there a lot more money on the sidelines that wants to get back into alts and then see us, you know, have a multi-week, multi-month trend again where everything is going up? I personally don't think that that's the case. I think a lot of these pairs are tired. Their stories are tired and worn out. I can't see just like how people would get excited about them again. But, you know, at the same time, like dinosaur coins pump, but they never pump the same as the first time, right? So again, and it also depends on ETH BTC. You have the Shanghai unlock coming up. Some people think it's a bullish unlock. Some people think it's a bearish unlock because, you know, mostly everything is I think a lot of people play jujitsu when it comes mental jujitsu when it comes to the whole bullish unlock thing. I don't think that that's the. I think that's an exception, and I don't know if ETH is going to be the exception. But we'll see. At the end of the day, I still react to things. So if the market is looking strong after, then I'm not going to argue with that. But ETH BTC, it's still in a range. It's not showing any kind of significant signs of strength, even when it briefly did. And again, this being sort of a proxy that I consider or rather a tool that I consider for determining whether or not I want to get into alts. Unless I have a very specific reason to get in one particular alt. I'm not that person. I can't pick out. I don't know the fundamentals behind certain projects. I don't focus on them. So I'm much more interested when there's momentum across the broad market rather than just trying to find individual pairs and do all that research. So if ETH BTC is showing signs of strength, so I mean, locally speaking, what stands out? These lows, right? We had that significant move up that people got bullish on for I don't know why, because it was just a small pop that was completely engulfed. I mean, if we're able to reclaim something like, what is that, 0.067, 0.0675, after breaking below these lows, I mean, that would be a positive thing, right? But so far, we're not doing that, right? It does. I don't really like to talk too much about hypotheticals because I'm a very reactive trader, and we could paint pictures all day of things that will not happen, and it just takes up too much mental bandwidth. Yeah. So, listen, I'm not writing off the possibility of ARB just absolutely ripping. If BTC stays stable, then yeah, it's absolutely possible for that to happen. It's got such limited history still. And usually, in the beginning of alts, I said this many times before, you do have a trend in the beginning that looks like, the beginnings of a new bull market. So could this put in a 2x from here and look really strong? Yeah, absolutely. But I think that no matter what, alts go through a reaccumulation period when they're new. So my point is, if it starts off strong in the beginning, it's almost always going to make new lows and go through a period of months of reaccumulation below all of that. So if you're trading this, it's one thing. If you're holding it, I have someone reach out to me recently about holding this with a lot of their portfolio. I don't know. I'd be very careful doing that. The alt has to come out at the perfect time for that to be the case, where it is kind of just up only. And I don't know if it's the perfect time for that. Does it mean that? And also, I'm not a believer in alts, period, really. I don't think that I have the capacity or power to tell you which alt is going to be the one that goes on to become the next major pair over the next few years. I think that, even things that are in the top 30, top 20 they're vaporware for the most part. But they'll still be around, but I don't know if they're things you want to hold. But yeah, ARB is, I mean, if we go by Kraken's history, all these are listed different times. So you're going to have different history, different starting points. But this is a 4-hour chart. We don't really have much of anything on the daily, obviously, at all. There's no weekly, really. If it's just still, we're in the second week. So there's really not a whole lot to go off of besides like your 4 and 1 hour charts. But by all means, I mean, you could see that even this, you could isolate the ranges in lower time frame price action, right? Sort of a little deviation down here, accepting back within this range, respecting that range as extreme, so retest. So, I mean, if you're looking to get involved somewhere, this is arguably a decent area to get involved for a long, looking for this level to hold for possible continuation through this high, right? Retesting this micro range right here. I keep saying micro because we're looking at, there's no real substance to this chart. It's only a couple days old or a few days old. How can they pay people? Because it's a futures exchange. So there's an equal and opposite position for every position. So for every buyer, there's a seller. And you only really run into issues like you're talking about if open interest is like giga elevated. But that's not the case. It's going to do an APT. Let's see. I mean, APT has a lot more history. So technically with ARB, this is basically where we are right here. So this is a good example actually, because it just kind of, it did what I was just talking about, but it doesn't mean that it won't do even more than that. So brief pump in the beginning, followed by a much longer period of accumulation. This is 3 months long, right? And clean. So clean in the sense that price spent all this time below, reclaimed this level, retested, and just clean price action. This looks like it's probably just going to come all the way back down, obviously. I think. I say obviously, but what other price history does this have, though? The longest running market might be, or it might be longer on, that's a ARB, okay. Nope, that's not what I wanted. ARPA. APT, why did I do that before? Okay. Basically the same. I think this is going to just bounce all the way back down. Spike all the way back down. Spike up and then continue to grind down. So where are we now? Yeah, no major rejection off of this low right now. So, I mean, honestly, I think that I've made it kind of clear. I think that this level, it makes more sense to be bearish at this level than to be bullish, or to be at least, put it this way. If I'm sharing a picture of a bear, it just means being defensive. I don't mean like shorting anything in excess of your positioning, your normal positioning, your portfolio, you know, taking anything more than a hedge, or taking off spot, or doing whatever you need to do to not be the person to FOMO into this level. Not trading at all, not longing. Again, not financial advice though. Any questions, guys? I think I'm going to wrap it up. It's around 1:30. I love this new Garmin watch, by the way. If you like smartwatches, the Apple Watch is good, but the Garmin watch is better. I don't know. I just buy toys, honestly. I saw the Garmin and I figured, what the hell? I bought it and I like it better than my Apple Watch. So I just bought a new Apple Watch like a month ago too. I just gave it to my wife. But I think it has a lot more fitness features. It has I think better maps, more customization options, and I think it just, I don't know. I like it all around. I like it better. I haven't played with it enough, honestly, though, so I can't give you specifics. All right, guys. Shout out to Cryptowatch. Check out the links below. I think I'm doing a pretty decent job of showing you guys why it's a phenomenal platform. What size garment? I don't know. It's pretty big, actually, though. And I have big forearms and big wrists, and it's pretty big. So shout out to Cryptowatch. Again, download the desktop platform. There is a free version, right? I opted for the trader package. You know, as you become, hopefully you get to the point where you sort of need these things, and you realize that money is worth paying. But by all means, go ahead and use the free version. Check it out. The mobile version is actually really nice as well because you could track your portfolio. Yeah, it looks like this is going to come lower. But yeah, that's it, guys. Have a fantastic evening. I will be going live again on, I think I'll be going live on Saturday, either Saturday or Sunday. To be determined. Maybe Sunday futures open, but we'll see. I got thrown off because of yesterday, but I appreciate you guys turning in.